Happy Sunday, guys. It's that time of the week where we go over the watch list for the week ahead. I hope you're all having a great weekend. Please ignore the scruffy beard here. I'm going to get a shave and a haircut this week coming. So, we don't actually have much in terms of what we're watching, but we are also in a couple of the positions that we were going to cover this week as well. So, we'll start out on the S&P. So, I'm already in a position here. This was a private position. I am waiting for a pullback here to send this as a signal to the Discord, but yeah, at the moment there's not too much going on. We remain bullish on the S&P. Despite global uncertainties, the S&P has shown resilience supported by strong US economic data, particularly in the labor market. Investor sentiment is cautiously optimistic about a soft landing scenario in the US, making a long position on the S&P 500 attractive. So the approach here was very, very simple, really. So if we look on the daily time frame, we've got this level of resistance that was formed, and it was rejected previously. You know, we can see that we had the upside wicks, so we knew that this was a pretty relevant resistance. We didn't want to necessarily buy into this resistance. However, once we saw this daily candle on Wednesday break through and hold above and close above, and then we had the lower time frame retest here. So you can see this is where we broke above and we came back down to retest this level. And as you guys know, I trade break and retests like bread and butter. It's just the way I trade. It's a huge part of my strategy. So we saw the break and retest and I entered quite aggressively. Now you'll notice the stop and the take profits are very wide. Keep in mind, this is the daily time frame. So I'm allowing price to move. This is more of a position trade into sort of the start of next year. I'm not looking to hold this for, you know, a week to 2 weeks. This is a longer term position. So next one we've got open is oil. Now, oil is reading as a bullish signal on our sort of analysis process. So what we've got here is oil prices are surging due to heightened geopolitical risks in the Middle East, raising concerns about supply disruptions. The conflict is expected to keep upward pressure on oil prices, supporting a long position in either WTI or Brent crude. So generally speaking, this is largely driven off the Chinese stimulus that's obviously started to fade now. However, we got news, I think it was last night or yesterday, that they're going to re-stimulate the economy again. So that's positive for oil. That, you know, increases production in China, requires oil, increasing the demand. We also do still have the tensions in the Middle East to help drive oil to the upside. So my first target here is $85. Well, I should say the first target really is $80 a barrel. So you can see the previous high around here, roughly here. And then the target after this is $90 and $85. So you can see there's sort of three levels here that I'm targeting. I have a hard stop here at $85. However, this is because if we see prices start to rally, if we see something happen, then I can remove this take profit and maybe move it up to $90 and trail stop. So you can see I actually have a second entry here as well. Both stops are, well, sorry, the initial entry down here has been trailed into profit. The second entry has obviously still got a stop loss that has some risk on it. But yeah, scaled into this position nicely so far. The entry was very, very basic. We've got the obviously support level here. We drew the fib, lined up with resistance. This trade is still valid. Obviously, you'll need to find your own entry because we're already positioned in oil. But yeah, if you can find some sort of entry to match your criteria or your strategy, then it's definitely not a bad trade to take. The New Zealand dollar is the next one we've got here. So the New Zealand dollar looks like a great short position. The problem is I wanted to get in pretty early and pretty quickly just to capitalize on this market. Now we saw a huge rally, so granted I am very late to the party, and this wasn't a signal, actually. This one was just a personal trade because the entries were pretty poor. So I'm waiting for a valid entry, again, to then send as a signal to the Discord, which may be on Monday or Tuesday. So we see this level here getting rejected. So again, this break and retest pattern that I keep mentioning has come into play. We've got the H4 moving averages that have just flipped to bearish. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. The analysis says here, the New Zealand dollar is under pressure due to weak Chinese fiscal stimulus and dovish expectations from the RBNZ. The USD strength, backed by strong labour market data and geopolitical risks, further support the case for a short on New Zealand dollar trade. So this one is more of a DCA position. You can see I've entered twice and I may enter again one final time if we can see this confirmation of this retest here and a continuation to the downside. I would also really like to see, sort of similar to what we can see on euro dollar, actually, the charts look very, very similar at the moment, but I would really like to see this 0.5 pullback or a 50% retracement. The problem is I just don't think the market has any momentum really to go that far to the upside. We'll keep an eye on it, obviously, but as far as I'm concerned, we need to sort of get into this market as soon as possible. And if we're stopped out and we do get 50% retracement, that just presents a better entry point to get a better risk to reward. In terms of targets, first target really is down at these lows, so we could say sort of around the let's say 0.59-ish. And that could be the sort of the first take profit here. So next up, we have got Euro Swiss. Now I sent the signal for Euro Swiss on Friday, actually just before market closed, because I was really liking the way it was setting up. So we actually have a sell order here, or a sell limit order here. So what we've got is very, very simple. So we've got both the euro and the Swiss franc are under pressure due to dovish central bank policies. So we don't really have much of a divergence there. But the downside in the euro appears more significant due to weak inflation across the eurozone. This supports a short on euro Swiss trade, as the ECB is expected to cut rates faster than the Swiss National Bank. So what we've got really is these moving averages, obviously very bearish. We can see the bearish pattern here. We draw the fib from high to low. We've got this 50% pullback here that also lines up with this previous structure, and we're just targeting this low down here at the 0.92 level. So it's very simple technicals, very simple economics behind this trade. So moving on to what we're notting, but watching. So we've got the euro dollar. As I said, this looks very similar to the New Zealand dollar trade. However, we are looking for a little bit more of a pullback here. You know, whether we'll get it, I don't know. We'll have to just keep an eye out. We might miss this trade. We might be a bit too late to this party. But the euro dollar trade looks really, really good. The euro is facing downward pressures as inflation continues to surprise to the downside, leading the ECB to signal faster rate cuts. Meanwhile, the USD is benefiting from stronger economic data and safe haven demand. Divergent central bank policies make this a strong short trade setup. So what we're really doing here is obviously drawing the fib, looking for some sort of retracement and then to take profit down. And I think this was, June period down at 1.07. So we'll see if we can get that level get hit. But yeah, this might be a trade we have to sort of give up on eventually at some point. If we don't manage to get an entry, we'll have to accept that we missed the trade and look for a new one. Now, the dollar Swiss is one I've actually been relatively flat on recently, but I'm starting to turn a little bit more bullish on this. So some of you guys may know I stream on Trader Nick's show quite often, and the dollar Swiss is one that I get asked to cover almost every day. And every day I give the same answer. It's like, it's not really for me at the moment. I don't see much going on. But things are sort of turning more to the bullish side, in my opinion. So we've got Swiss franc is weakening as inflation falls significantly below the S&P's targets, increasing the likelihood of a more aggressive rate cut. Meanwhile, the USD benefits from both economic strength and safe haven demand amid geopolitical risks. A long USD Swiss position capitalizes on this divergence. So this would be more of a, I just said it would be more of a divergent trade rather than anything else. So what we can see, if we look on the fib here, we've already had this sort of golden zone get tested here. So I don't have a set entry in mind. It's more just waiting for something to happen in this market to trigger that buy position. So we do have these H4 moving averages that have just turned bullish. We've got this level of structure that has been retested. Again, I'm going to say again, I like the retest, break and retest pattern. So this does look like technically and fundamentally quite a strong trade to go to the upside. In terms of targets, depending on how the economics develop, I wouldn't be really opposed to targeting, the sort of May high down here, up here, at 0.91. That is a huge target, but we'll see. Obviously, like I said, it depends how the economics develop. Now, the Dollar CAD is one that's been on my watch list for a while, and it's just been on a rally to the upside. We've not really had any chance here to get in. So if we look down here on the H1, we can see it's just a huge rally to the upside. Anyone selling this market would have had an awful time. Anyone buying this market would have probably had one of the easiest trades of the year, to be quite honest. So if we look on the H4 here, we've got the previous high at 1.36 that were looking really to get used as a retest. So again, looking for that break and retest strategy, just back into this previous high. So this was very, very straightforward trade, to be honest. It's just a case of whether we can get this sort of pullback. So the reason for this trade, rising oil prices have helped support the Canadian dollar, but USD's broad strength and geopolitical risks provide a favorable environment for the US dollar CAD long positions. While oil prices boost the CAD, the overall strength in the USD, driven by the economic resilience and safe haven demand, makes this trade favorable. So there you go. This trade is mainly capitalizing on the US dollar rather than the Canadian dollar. Now, we are also in longs on oil, so it would be a good hedge here. So if we were shorting the CAD and long the oil, it could minimize some of the risk there that we have exposed. So yeah, again, this trade looks pretty solid if we can get this entry. Now, platinum's making its first time appearance on our stream or on our watch list. I very rarely trade platinum, but here we've got weak demand from the automotive sector and supply chain disruptions continue to weigh on platinum prices. Lower demand catalyst converters have diminished industrial supports, making platinum vulnerable to downside risk. So using that, we can look here to basically look for a very simple trade. We've got the break, we've got the possible retest here. We'll obviously see how the market's open. This still is a little bit of an aggressive entry here, but to sort of back this up, we do have this level of structure that lines up very nicely with this fib golden zone, and the fib extension down here does line up with the previous low, which is a good confluence. The technicals are matching very, very well, and obviously, like I said, the fundamentals behind platinum are sounding relatively bearish now. So this trade, yeah, definitely not in a bad position, but I will have to do further research because I'm not a platinum trader. I need to double check that, I am on the right side of this. So guys, that is it for this week's video. It's been actually quite quick compared to some of our other watch list videos, but I hope you all have a great week. Please like and subscribe as always. And if you want to join the signals, the Discord link is in the description. Have a good week. I'll see you later.